Welcome to RANsquawk morning briefing for Tuesday 17th of November 2009. First of all, just recapping, one of the major events to happen yesterday was those comments out of Benjamin Bernanke, the Fed chief, who did state that, or repeated, conditions like to warrant exceptionally low interest rates for an extended period and inflation like to remain subdued, and did help keep a bid into T-notes into the close, allied as well to some downbeat comments out of closely followed analyst Meredith Whitney, who did say that she hasn't been this bearish in a year and the banking sector is not adequately capitalised, expecting a double-dip recession. We also saw comments into the Wall Street close that Fitch believes that US regional banks face greater exposure to losses due to commercial real estate loans, which may increase their chance of future ratings downgrades. Some of those comments, particularly from Whitney and Fitch, did weigh on the financials. Although US equities did finish in positive territory, that sentiment did carry over into Asia, where the Nikkei finished down 0.6%. We have traded in negative territory around 0.5% or so in the FTSE CAC and DAX today. Pretty much a flip reversal of the sector basis. Those Bernanke comments, in particular for the US dollar, he pointed that the Fed is monitoring currency markets closely and they will conduct policy in a way that will help ensure that the dollar is strong. With that, the dollar index is trading up 0.4% today, which has weighed on commodities across the board, with WTI crude futures trading lower and spot gold also moving off its Asian highs. So, as mentioned, on a sector basis, basic materials, oil and gas, as well as financials, with some of that hangover effect from the Whitney comments, are underperforming this morning. In terms of other comments from Fed officials, Cohn saying overnight that the Fed's low interest rate policy was meant to encourage investors to move into riskier assets, but there's no signs currently that an asset bubble is building in the US. And also late yesterday, Fed's Fisher saying Q3 GDP probably was weaker in the US than 3.5%, more like 2.5%, and that US unemployment likely to remain painfully high for much longer than preferred. Elsewhere in the currency markets, we've seen Aussie continue to weaken across the board. Combination of a few things, obviously, as mentioned, the strength in the dollar has weighed on commodities, and in turn those commodity currencies such as the Aussie, Kiwi and also Canadian dollar have continued to weaken. Also, Australian Central Bank, they released their November minutes, which were slightly more or less hawkish than we're expecting, a bit more on the dovish side. They said although they see more rate rises as likely, they left the door open in terms of the pace of future moves. Some were thinking that they may move again next month, but that now looks to have been taken off the table. Elsewhere as well, sterling CAD has been a significant mover, obviously as mentioned, with the commodity weakness affecting the Canadian dollar, and also a bit of sterling strength seemingly stemming from Sentant's comments, which came out around 6 o'clock yesterday evening. He said that the Q3 GDP estimate was a shock and maybe unreliable, saying that the UK economy is moving into a recovery phase and short-term economic news is very positive, saying he expects UK unemployment to level off at around 2.5 million. Taking a look in terms of other equity news of note, UBS is seeing a bit of outperformance against their banking peers. They had an investor update today, pre-market. They said it targets to achieve annual pre-tax profit of around 15 billion Swiss francs in the midterm. They say cost reductions are also on track. Taking a look in terms of the data for today, we did see the pound get a bit of a bid on a 0.1 higher reading on the year-on-year CPI for October out of the UK. That came out at 1.5%. Other than that, now we're looking ahead to the weekly ICSC chain store numbers at 12:45. That'll take us into the 130s from the US, will be PPI for October. We'll then get the TIX data at 2, followed by industrial production and capacity utilisation at 2:15. And for the energy traders, we'll have the weekly API crude oil inventory numbers that we do after NYMEX pit close. And not forgetting, in terms of the housing market, we'll see the NAHB housing market index at 6 in London, so midday in Chicago. In terms of supply as well, we'll see reverse auction the first of the week from the BOE. They're targeting today March 2036 to Jan 2060 maturities for the size of 1.7 billion. And then in terms of speakers, a couple to be aware of. You've got Stark, Lacquer, Tumber Google, Pianalto and Treasury's Gardner all due later on in the US session.